So again, once again, welcome to Elevating Your Business Acumen through Financial and Operational Planning, hosted by the University of Arizona Global Campus and the Forbes School of Business and Technology. And we are so happy to have you here today. And I am just excited and honored and to introduce our two key speakers for today. I call them the dynamic duo. When they get together, you know it's going to be a good time. And so without further ado, I'd like to introduce Mr. Bill Davis and Miss Brandy Havens. Bill is the program chair for the University of Arizona Global Campus Forbes School of Business and Technology, Bachelor Operations Management and Analysis program. Bill has extensive experience and education, and he has over 3 decades of experience working in the beverage industry, specifically in the PepsiCo system, serving in front, middle, and executive level leadership positions. Bill is a academic who successfully transitioned his highly successful career into academia. In his 19 years in higher education, Bill has served in numerous positions such as program chair, lead faculty, assistant professor, core faculty, instructor, instructional specialist manager, and associate faculty. And he's still going. During Bill's tenure as an executive in the PepsiCo system, he successfully managed major profit centers in the Chicagoland division, overseeing all aspects of business, including sales, profitability, asset management, and market performance. Bill's expertise in financial and operational planning, coupled with strategic decision-making, has equipped Bill to effectively guide his team and drive improved business acumen. And on a personal note, he's one of the kindest, most positive persons you will ever encounter. So we are so happy to have Bill as one of our own. Thank you so much for being here today, Bill. And his counterpart is equally as amazing. Miss Brandy Havens is an assistant professor of accounting at the Forbes School of Business and Technology at the University of Arizona Global Campus. She is a certified public accountant and chartered global management accountant with experience in general accounting, SEC financial reporting, and Big Four public accounting. She frequently works as a technical writer and subject matter expert in the development of accounting and finance educational materials. Brandy began developing and teaching online accounting courses nearly 20 years ago and enjoys the opportunity to guide and support others as they pursue their career and development goals. So Brandy, thank you. And again, Brandy's personality is like none other. She's always just excited and a breath of fresh air. So I know the two of you together are going to just give us everything we need to know about elevating our business acumen. So without further ado, I turn it over to you. Thank you.
Ebony, thank you very much. And I'd just like to say that our dean, Dr. Maya Zelahig, she calls us Team B&B. So we've been doing this for a few times. You're going to see our passion. You're going to see our interest in this particular topic and subject. And, you know, I'd like to say it's an honor and a pleasure and a privilege to present with Brandy again and to pay our knowledge and expertise and experiences forward to explore the fascinating world of elevating business acumen through financial planning and operational planning. So in simple terms, if someone was to ask me, you know, what is business acumen, I would just simply say it refers to the ability to understand and analyze business situations, to make informed decisions and to drive successful outcomes, financial literacy thinking, practical knowledge. So we're going to do our best to make this practical and applicable so that you can improve your business acumen. But our goal is profound. We want to empower you. You know, at UAGC, we empower, we enrich, we support, we graduate students, we care. We're in a culture of care. And so this is just another demonstration of paying it forward to our community, again, to enhance your understanding of the financial aspects of a business and to, here's the key word, seamlessly integrate them into your operational strategies. You'll hear a little bit about that. But throughout this presentation, we want to build awareness around the critical importance of all of these things. So what I would like to do right now is just kind of go through the agenda. And if you could put that up, thank you, Brandy. The we're going to cover today is, we've obviously had a welcome here, and we welcome you. And Brandy, would you like to welcome everybody real quick? I'd be remiss if I didn't give you that couple minutes here.
Absolutely. Thanks, Bill. I'm just super excited to be here today. I feel so fortunate that Bill invited me to be a part of this. We are going to have a fantastic time. There's nothing I'm more passionate about than accounting and finance. And I'm just very excited to be able to share that with you guys today.
Brandy, thank you. And, I love your energy, what you do in the Center for Women's Leadership, and to get the stage with you today here is an absolute honor, and to do some good here for, again, UAGC. Today, we're going to be talking a little bit about the key components of business acumen. We're going to talk a little bit about 5 key business drivers. And then you're going to have an opportunity to reflect on your business acumen up in the front end, describing yourself as having good business acumen. So we'll take you there. And then Brandy's going to propose some questions to make you think. And then she's going to give it back to me. And I'm just going to briefly talk a little bit about operations management, what they do, and some real world applications. And again, how business acumen is applied in that thinking. When you do this so much, it just becomes intuitive. And I think what you'll see coming out of me today is not only some of the things that I've done in the academic world and what I've learned, and believe me, I've learned a lot. I believe people learn on the job, off the job, and through the job. And I bring that practical side into academia, but I have to credit my education for a lot of the things that I did. I got it while I was still working. And believe me, I was able to apply these concepts into things that I was doing in the PepsiCo system, and they made a big difference. So we're going to give you some real world applications. Then we're going to turn it over to Brandy, and she's going to talk a little bit about accounting. And you're going to learn about financial statements, and she'll give you a couple quick examples. And then what we're going to do is give it back to me, where I'm going to give you a real life example of some tools, my P&L from my earlier days, just one of them. I grabbed one from a file I had, and it's kind of a nice way to remember what I did for those years in the business, 24 years at PepsiCo. But I'm going to talk about some examples. I'm going to connect the dots. Now, at this point, we're going to hope, Brandy and I, our wish is, our hope is that we've improved your business acumen. We don't expect you to keep everything we say here. Most of you are already talented, and we know you're doing many of these things, and you're here for a little knowledge or a little freshening up or whatever to grab a new idea. But our goal is that hopefully we give you something you can use, and you retain a few of these pieces, and really that's the goal. So we're going to give it back to Brandy at the end, and then she'll close us out. So with that said, Brandy, can you go ahead and give me the next slide, please? Okay, what I would like to just talk about, this is something that really, truly impacted me, actually in my academic career here, because it was some training we were put through earlier in my early days when I was just entering into the academic side. And this was a book by Kevin Cope and some training that we completed. And Kevin Cope, refers to business acumen simply as business knowledge, analytical thinking, problem-solving skills, and a strategic mindset. You're able to proceed with these particular business thinking, analytical thinking, as you move forward. What I always liked was how he described the key business drivers of any business: cash, profits, assets, growth, and people. People being the most important resources. They're aligned, they're structured, there's processes that they're involved in, et cetera. And to keep that team moving forward and innovating is very important. But cash is king. It's like oxygen to any business. You got to keep that revenue going through. You got to do good things profit-wise. And you want to also understand, are you growing or are you sitting still? That kind of thing. And I'm going to show you how that kind of applied to our business. So you can go to the next slide, Brandy. Now, if someone was to ask you, how might you describe yourself at this moment in time as having good business acumen? I'll just reflect on that a second, because Brandy's going to come right back to you. But maybe you might say something like this. Some may say this in the audience right now. You're really solid. You're strong. You might say something like, I have strong business acumen. I believe and have a deep understanding of business, market trends, financial analysis, strategic decision making. My strategic mindset, analytical thinking, experience, and expertise allow me to navigate complex business landscapes and also make informed choices that drive success and growth. In other words, you see the bigger picture. You see the organization, you see the marketplace, you understand the inputs that are going into the culture and how that all works and as it gets all put together and how favorables come out and unfavorables come out. But you're also aware, are they relating to these business drivers? Are we doing things efficiently and effectively? Are we doing things with quality? All that makes a difference. And for example, what I would like to just submit to you on this particular slide, that if you were to look at a lot of our classes, you know, from accounting to operations to operation courses, decision modeling, you know, all of the things that we offer, and think a little bit about what's in those courses. For example, Business 402s, it's the capstone for a lot of the BA degrees. In there, you know, you'll learn about ratio analysis. You know, you'll understand how the financial statements for a company, you know, how to interpret that data. You'll get all of that in that particular course, as well as liquidity ratios, current ratios, quick ratios. But you start to think a little differently about what you do. You know, are we, you know, my particular vice president, Cole McCombs, in my early days, used to tell me, Billy, spend $1 to make 10. You know, he always wanted me to understand people, process, structure. He always wanted me to understand, are we making money? Is this efficient? And I'm going to show you some of that thinking as we go forward. So for now, let me go ahead and turn this over to Brandy.
Awesome. Thank you, Bill. All right. So here's what I'm going to do for our audience. I'm going to pose some questions to you guys, and I want you to think about these questions from the perspective of either your current organization or maybe somewhere that you've worked in the past. And as we go through these questions, you're going to see a poll pop up on the screen where you can indicate your current comfort level with these types of questions. So these are just some ideas of things to think about. What was the company's total revenue? How about profit margin per unit? How do you even calculate profit margin? How can you tell how much cash a company's generated from operations? How can you calculate growth or decline in revenue or profits year over year? How do you find out how your results compare with those of your competition? So these are some things that we are going to focus on today. In fact, at the end of the presentation, we may even revisit these questions to see if you feel more confident. And I feel confident that you will. So with that, I'm going to toss it back over to my colleague Bill to talk more about operations management.
Randy, thank you very much. And if you want to move to that next slide, there's an article here that I helped author with our team. And I think it kind of gives you a good overview of what operations management is. You know, you have to operate a business. You know, I like to say that they're the operations managers, they're the backbone of efficiency within an organization. They ensure everything and everyone, departments, teams, goods, services, finances, that they're delivered and they're running smoothly. You know, we're all part of one big wheel here, one big organization, and there's a system going on. And operations management is a hot topic and a burgeoning field with skills you can apply across a variety of industries, and with good reason. Whether it's business acumen, problem solving, project management skills, the education and experience to gain from working hands-on with people, processes will prepare you for a variety of professional environments. And when you read this article, I suggest you take this and read it because it is very interesting and it breaks it down very well, where it talks about how the administration of all these business practices create the highest level of efficiency possible within an organization. And again, it's concerned about converting materials and labor into goods and services as efficiently as possible and to maximize the profit of an organization. The thing I learned early in my career is truth in business is the bottom line. You want to make good decisions. So just realize that as you read this article, and what does an operations manager do? So it's important that it entails a fully understanding and education of the skills you need to be successful in that particular field, in that career. So there you go. You've got a little feel for what's going on, but what's involved in operating, and here's what I wanted to get across, things you're going to see today: financial statements. You're coordinating business activities, direct administrative processes. You're preparing staff work schedules, assigning specific duties, direct or coordinate finances to maximize efficiency. You'll see some examples of that. Develop, implement, and review processes and procedures. Are they working? Are they efficient? Do we have fallout? Are things working the right way? Is there quality? Identify quality control issues. Offer ways to improve. Strategize. How are you going to proceed with your objectives for different departments? How does it all come together to produce goods and services in a high quality way? How do you recruit and train and supervise your staff? Those are operating activities. Examining data analysis, forecasting, long-term planning. You'll see some examples of forecasting. Again, we only have so much time to kind of give you the concept today, but you'll see that come out. So next slide, Brandy, if you would, please. Now, this is just something for you to download if you like. I love writing articles for our students here. I've done about 160, and they're short articles, 700 words, 800 words, but just to allow them to see. This one is on the marketing process, and I put this in here for everyone because there's a system in place here where we manage the process for effective marketing. These simple, important steps for the marketing process, when done properly, help attract customers, generate sales, profitable growth, and create consumer value. You manage the marketing mix, the marketing process properly, and then you can compete successfully in the marketplace and drive customer satisfaction. What are they? You'll see them in the article. Situational analysis, understanding the situation in the market, the needs, etc. Strategies, analyzing the market. Innovating. How do you want to proceed? Targeting the segments you want. That word targeting. What do you want to do this in? How do you want to segment the market? What do you want to do? How are you going to add value in that segment? Then the campaign development, which is the marketing, and how are you going to advertise and bring it to the market? Execution, the measurements, measuring the impact of what you did. There can be some financial construction there that you can look at, but all of that comes together, to ensure relevance and success. And that's what I'd like to get across. You're free to read this one. If anybody ever wants to call me and discuss this, marketing, these steps, I'd be happy to. Next slide, please. Now, at this point, I want to turn it over to my good friend and colleague, Team B&B, Brandy Havens, to talk about her field. Brandy?
Yes, thank you so much, Bill. And again, there is nothing I like talking more about than accounting. So I'm really, really excited to be here and do that today. So let's kind of talk about some basics. What is accounting? Now, don't worry, we're not going to get too far into the weeds here, because I know that accounting can seem a little bit scary at first, but we're just going to talk about some real basics. So what is accounting? If you look up the definition of accounting, you're going to see all sorts of things. You're going to see things like keeping financial records, analyzing business transactions, processing economic information. And while all of these are true, the definition that always stands out the most to me is accounting is the language of business. Now, while this is actually a pretty common definition of accounting, one very famous investor made it even more so. Warren Buffett once referred to accounting as the language of business because he said that you have to learn the language before you can understand the financial reports. And at the end of the day, that's really what accounting comes down to. It's about recording an organization's business transactions and reporting them in a way that's meaningful to business stakeholders. Now, our stakeholders can include external parties such as investors, creditors, and customers, as well as our internal stakeholders such as managers and employees. And the purpose of accounting is really to provide financial information to these parties in order to support and inform their decision-making in a meaningful way. We want to put our stakeholders in a better position to make better business decisions. And that's really what accounting is all about. Now, for our external stakeholders, and again, these can include investors, creditors, suppliers, government agencies, even competitors. The main source of financial information is going to be the 4 general purpose financial statements. These are the financial statements that are mandated by the Securities and Exchange Commission, that is the SEC, for all publicly traded companies in the US. And believe it or not, anyone can access the financial statements for any publicly traded company at any time through the SEC website. They are available and accessible, free to absolutely everyone. When you have some time, I encourage you to give it a whirl. Look up some companies that interest you. You are going to be amazed at how much data is available at your fingertips. However, as we all know, accessing the reports is one thing, but they're only going to be meaningful if we understand what the statements are actually telling us. So let's take a look at the 4 basic financial statements. These are the financial statements that you can find online for every public company. They're going to include the income statement. Sometimes you'll also hear this one referred to as the profit and loss statement, or simply the P&L, the statement of stockholders' equity, the balance sheet, and the statement of cash flows. So as we touch on each of these financial statements, I thought it might be fun to look at some real world examples. All right, so let's start with the income statement. So here you're going to see an image of the income statement from the Colgate-Palmolive company. This was taken straight from the annual report on the SEC website. Now, the first thing that I want to point out is something that's going to be relevant for every company that we look at today. If you look at the very top of the statement, I've got it circled in purple here. It indicates dollars in millions. Now you may be thinking, well, what does that mean? That means that for every number you see on the statement, you need to add 6 zeros in order to arrive at the actual number. All right. So for example, we're looking at the 2023 sales. At first glance, the number looks like 19,457. But because the dollars are in millions, we need to add 6 zeros to that number. So that means that net sales were actually 19,457,000,000. And the same is true for every number that you see here. Large companies will commonly report their statements in millions just to simplify the numbers a bit. Smaller corporations may sometimes report in thousands, but either way, it's something that has to be disclosed at the top of the statement. So anytime you're looking at a company's statements, take a glance at the top to see whether they are reporting in thousands or in millions. So now that we've established that, what are some cool things that we can learn by looking at an income statement? Well, primarily profitability. That's the name of the game, right? That's why every business is in existence. They want to generate profits. They want to generate returns for their investors. So as we can see here, the income statement clearly shows key figures related to profitability, including net sales, gross profit, which is simply our net sales minus cost of sales, or it's sometimes called cost of goods sold, and operating income, which is our gross profit less our general and administrative overhead cost. Now, I can tell you that from the standpoint of analysts, the figures that tend to get the most attention are going to be sales, operating profits, and earnings per share, as trends in these areas tend to be strong indicators of what we might expect to see in the future. Now, we're going to take a little peek at the statement of equity. This time, we're looking at General Motors. And again, the figures are reported in millions. We're not going to spend too much time here because the statement of equity can get pretty complicated, but there are a couple of pretty cool things that I wanted to highlight. I'll bet that most of you have heard of things like dividends or stock-based compensation. Sometimes it's called stock options. They tend to be very commonly used for executives in a company. You might have also heard of stock buybacks. This occurs when a company actually buys back their own previously issued stock, most of the time because they think it's undervalued on the open market. That's all a bit beyond the scope of what we're going to be discussing today, but guess what? Companies are required to report this information, and guess where you can find it? On the statement of equity, okay? All right, next, let's look at a balance sheet. All right, for the balance sheet, I thought it might be fun to look at Apple, all right, because Apple always makes for an interesting analysis. Now, again, I'm not gonna spend just a ton of time digging through the numbers here, but in short, the balance sheet details the components of a company's assets, liabilities, and equity. Now, Apple's balance sheet was pretty long, so I couldn't include the entire statement on the slide, but you are going to see a couple of areas that I highlighted. I highlighted their current assets and their current liabilities. And I did this because I would be willing to bet that at some point in your career, you've heard the term working capital or working capital management. Well, working capital is simply the difference between a company's current assets and their current liabilities. And as you can see here, you can get that information right from a company's balance sheet. Parties that tend to be especially interested in working capital are going to be lenders such as banks or suppliers that are thinking about extending credit. They want to feel confident that a company is going to have enough working capital to repay their debts in a timely fashion. All right, now last but not least, we have the statement of cash flows. This time we're looking at Southwest Airlines. The statement of cash flows is always going to be broken down into three primary sections. You're going to have operating activities, investing activities, and financing activities. Now, again, the statement's pretty long, so for this slide, I just included operating activities, and that's okay because that's where analysts and other stakeholders tend to focus most of their energy anyway. Why? Because our operating cash flows are simply those cash flows related to the company's core business operations. That is the company doing whatever they are in business to do. If a company wants to be viable long-term, it is paramount that they are able to generate positive operating cash flows. So these are the financial statements, and they are important when evaluating a company as an external party. So maybe you're an investor and you're thinking about buying a company stock. Maybe you're a banker and you're thinking about whether you want to lend money to a certain company or not. Or maybe you just work for a company and you're thinking about maybe, whether you want to enter into a business relationship with another company. We're talking supplier agreements, major customer agreements, things like that. These are all situations in where the financial statements can be very helpful in informing and supporting your decisions. But this is only the tip of the iceberg because financial information is also extremely valuable in supporting and informing the decisions of our internal decision makers. These are our employees, managers, and executive leaders. And with that, I'm going to toss the ball back over to Bill, who's going to talk more about financial information for managers.
Brandy, thank you very much. And, I'd like to say that every month back in my first career, usually the last Friday of the month is when our accountants came in and we had a big board meeting, and everybody be sitting on one end of the table and we'd be sitting over on the other end of the table, and people like Brandy and Don Fry and everybody would be there with the books and looking, and I would get mine prior. So the first thing I'd be doing is looking at it and scanning it because I needed to have explanations if something was off. If I didn't make sales, some expense had overrun, I needed to know my business. And if I didn't, that hurt my credibility. So we always did a lot of preparation in a good way to make sure that we were ahead of the accountants. So Brandy, thanks for all the stuff that you and everyone do in your profession, because it's such a big integral part of the operation. So thank you. If you want to advance the slide, I'm going to take you now towards some real world application. And what I just like to talk about, these are things I kept in mind that impacted my P&L, and I had my team all involved too. And I'll show you how I kept everybody engaged. Okay. And when I think about engaged, I think about my line of sight, seeing people. I think about involving them. I think about sharing information. And then I also think about rewarding them when they're doing good things, when we're making good success, to make sure that some rewards come their way too, in those, whether it was financial or maybe some celebration or something. But it's all about the bottom line in the business. So the 5 Live contribution format, analysis and reporting format, which highlights the 4 financial leverages. Your volume, your mix management. I'm going to show you how I used to forecast my volume. Again, you're just going to get a little snapshot, but for those of you that understand this, you'll see it. For those that are still learning a little bit, you'll understand maybe how a big organization like PepsiCo operates. And then price points. You know, we have to set the right price points. The market dictates the price. But you also set price if there's niches. You compete in different segments, but you keep that in your mind. Your variable costs, you're always thinking about, you know, how far can I go, and the levers, you know, what do I do? Where's my variable cost on this? You know, for example, if sugar went up in the soft drink business, you would consider that into your mix and you'd price accordingly. And then you were always looking at your constant cost. You know, for example, I could not get additional headcount and so forth unless I showed it in the numbers and that I needed it. So a lot of things were based on financials, but there's the formula: net sales minus variable cost equals your profit contribution, or marginal contribution, some are call it, minus your constant cost gives you your operating profit before taxes. So the break-even concept, this is a good one to understand. You know, how do I break even? You know, your analysis or cost, volume, and profit analysis. A valuable tool for measuring the effects of changes in selling price, fixed cost, variable cost on volume that must be achieved before the firm can realize a profit. How would I use this? I would use this selling at store level, selling at the front office, top to top. So we would do a profitable negotiation that it was a win-win for both parties. And I'm going to show you how simple that formula really is. And I'm going to interpret it for you so you see this very clearly. But at break even, the firm realizes 0 profit and 0 loss. So that's where we want to get to grow incremental volume. So if you want to go to the next slide. Okay, here is really the formula that I would drive home to everybody in my organization. And what I was always concerned about was they understood when we were introducing things, why we were doing them and what we were doing and what channel. So I put them through training. I was a certified trainer at PepsiCo, what they called me a coach. And then I did the CHAMP program, which was teaching our frontline performers how to sell in at store level. But always be sensitive to your cost. Okay. That around approximately what we pay for it, set the right selling price if you're going to negotiate some kind of promotion. And then what is your gross profit? So when you do this, you're looking at this to say, okay, this is what I make. For example, the card on the right was a wallet card that I gave to a lot of the executives just for quick reference, but this became intuitive eventually after we repetitively taught it in the organization. And then margin, your gross profit unit divided by your selling price gives you what you need to do to break even, how much volume you need to do. So these particular formulas were very important to us, because we think, for example, if your MC represents 100 and you divide that, you reduce that by 50%, you know, you have to do 50% more volume just to break even. Okay, so you start to see exactly what we're talking about here, because it's all about the dollars and the cents, and not necessarily losing money, right? If you don't have to, unless it's marketing. Now, next slide, please. Now this is an eye chart for you, but I'm going to go ahead and just, you know, don't try to read this unless you got super glasses. But I think I think it's a good one for you to see how comprehensive and things we looked at things. When I was at PepsiCo, there were some vice presidents I worked for that said making plan is not an option. Figure it out. Here's your forecast sheet. Give us a forecast that works and go get those sales. Look at your marketplace, your channels, your segments. For example, my memory serves me well. I still can remember we had over 5,000 accounts in Chicagoland. We had all these different packages. We had a route system. We had chain stores. We had independent grocers. We had wholesalers. We had club stores. We had vending channels. But anyway, all of that I would take into consideration. We had great analytic tools too. But I would fill this particular form out and give my forecast. And that particular forecast would populate all the way across where someone in accounting or finance did this. And what we would hone in on is, here's your packages and volume. Here's the percent of growth that calculates from prior year, your percent of mix. It's very important to understand what particular products do the majority of your business. Now, if my memory serves me right, I go back and I think about Pepsi. Colas, for example, were like 60% of the volume. Mountain Dew, add that in, that's about 75% of the volume. The other 25% was in flavors and different packages. Now that mix has changed with alternative beverage like teas and juices and waters. So the mix in the market has changed since I was in it. And it's proliferated into a lot of the ones and twos in the convenience stores and all the alternative beverages. But you can see what we're demonstrating with this sheet is all of this rolls into a forecast. I get that number, and then what happens, all this rolls into the profit loss statement. You want to go to the next slide, please? Now, what I wanted to show you, this is just something I happened to find. I saw this would fit in good. And again, kind of an eye chart for you, but let me explain it. Brandy did show exactly what an income statement looked like. All right. Now, this is a little more with the line items included and so forth in my controllable cost section. But as you take a look at this, realize that this is also known as the income statement, and it provides a summary of the company's revenue. In this case, the sales branch, the expenses, the net income over a specific period, and it helps assess the profitability of the business by showing the company's ability to generate revenue and control expenses. Controlling those expenses was my responsibility. And also too, generating the sales line was a lot of my responsibility, in addition to some corporate partners and things that did some things with chain stores. Now, when I look at this and I think about strategy, how do I want to proceed? I used a few tools. One was called the Boston Consulting Group Matrix, where you looked at where your high margin items were. You looked at where your stars were, where you had minimal investment in them, you had high market share. And then you had some question marks in your package mix in that forecasting model I showed you prior that you would look at and you would say, I'm not going to do too much with that. I think we'll work on this in the next period. And we would look at the mix and try to exploit the things where we had, sustain the business, but look at some high margin items we could bring in and work them into our strategy, where using the business model canvas, BMC, and we would look at our segment of market, all the customer segments, value propositions, channels, customer relationships, revenue streams, resources we had, partnerships, where can we work this different in this whole system, in this whole model? And as you look at this one to the left, you'll see the current month, and then you'll see the actual and year-to-date versus the budget. So we were constantly keeping scorecard, and then we would come down, and all this that Brandy showed you earlier would all factor into this final statement, and we would look at this. And if there was a problem, we would drill down into one of those selling schedules, and we would look at the data. And data, when you look at statistics, collecting, organizing, analyzing, and interpreting, and the art in all of that is in the interpretation. Understanding your market, understanding the as is. So you can see there that was a great tool. And what happens to you though is you just keep thinking business. You're still thinking customer service. You're still thinking service. You're doing everything you need to do. You're motivating your sales teams. You're empathetic. You're giving them pep talks. You're out there doing everything you can do in the marketplace, satisfying customers, consumers, managing venues. And what's happening to you is you're it becomes intuitive. You just start to work like that and operate like that. And it's kind of a hard habit to break away from, because you just see things kind of black and white with business. But you can look at the selling schedules. There's warehouse, occupancy, selling expense, fleet expense. All of those are line items. So if one of those was off, the eyes of the accountants and the general managers and VPs were looking at me, asking me questions. So I better understand them. Next slide, please. Now, here's some real world application. What I wanted to talk about, to make that P&L margin go better, if I had some that had stable share, for example, there's a couple examples here from my route days, because I worked my way from the bottom up. And when I worked for the 7-Up company, I knew that some of these were loss leaders. We do 8-pack displays in those years, and then we would put high profitable items next to those displays, but we didn't make much on those 16-ounce, and it was a lot of work. 70% of the market was in glass, 53-pound cases. But when we would get products like Perrier water that we would sell for $16 a case, and then we would turn around and we would maybe make $8 a case on this, because the floor cost was $8. So if we sold it for 16, we were grossing 8 on our margin, and then we'd subtract the expenses. But the bottom line is, to me, I was on a commission basis in those years. I owned and operated that business, and I would make incremental money that went up on top of the top line. So, and then we would go from there. So that was a way to generate business. The other one was to get involved with partnerships like the Taste of Chicago. When I look back at all this and I think about Wrigley Field and Taste of Chicago and all the big events we did, and where we partnered. For example, the Taste of Chicago in those years generated 30,000 cases. So we would go negotiate a price, use those break-even formulas, and understand what is it we need to do, because all that directly went into the bottom line. So if I gave everything away necessarily just to be there, it might have been advertising, but I still wanted to think about how does this strategically fit into the mix. So that's important. There's my sales team, proud of them all. The administration, we had a great group. We had many more people involved than them, but great stories, great memories. So with that said, Brandy, I think we've given them a good taste of how the big picture looks. I'm going to turn it back over to you, and I hope I did a good job of giving you some concepts and chunks to remember. Thank you.
Absolutely, Bill. You did a great job of showing how these principles are really used from a management perspective, because that's something we often forget is, managers are very key users of financial and accounting information. So audience, let's revisit these questions. Testing your business acumen. What do you think now? Do you at least feel a little bit better about maybe answering some of these questions, or knowing where to find the answers? Because you know what, that's key, guys. You're never going to know the answer to everything, but if you just know where to find the answer, you are halfway there, my friend. So I hope that everyone feels a bit more comfortable with these concepts now. And what we're actually going to do is open this up for some Q&A. And Bill and I will be more than happy to answer any questions that have came up. I'll try to hop over here to the chat and the Q&A and see what kind of questions we have here. I see we've got one in the Q&A, and this is a great question. It says, are people/labor considered overhead? That is a fantastic question. All right. And it is going to depend. It is going to depend on exactly what their job is. In accounting, we often talk about direct labor, which in practice is sometimes called touch labor. Okay. If you're talking about a person who is actually physically making the product, okay, ask yourself, is this person touching the product? This is going to be people on the production floor, people on the assembly line. If they are in that group, they are considered what is part of direct labor, okay? Now, if they are say, a supervisor, maybe they don't directly touch the product, or maybe they even work at corporate, then they are absolutely part of overhead cost. If they are part of the management and leadership at the manufacturing plant level. It's part of manufacturing overhead. If they work at the corporate office, maybe they're in sales or marketing or something like that, then that is part of corporate overhead. Excellent question. Let me hop over to the chat and see what other questions we've had come up. And Ebony, you can feel free to hop in too if you've noticed any questions pop up, because I haven't really been able to monitor the chat as we were going here.
There have not been any questions in the chat.
Okay. All right. Well, that is perfectly fine. If anybody has any, they can. Oh, okay, here we go. Oh, this is really, really good. How do you explain financial information to a non-financial audience? That one is oftentimes tough. My best advice, and this is through a couple of decades of often teaching accounting to business students. Try to keep things as simple as you can. And try to, if you can, try to use language that they already understand, you know, things that will make sense to them. For example, you know, when Bill was talking about some of the terms and concepts that managers use, you know, non-accountants may not understand something like contribution margin. I mean, what is that? But if you say, well, we're talking about sales, and we're talking about expenses that vary depending on our production volume. These are things that most people can understand, even non-accountants and non-finance people. Also, you know, data visualization can be a really powerful tool also. So, you know, if you're a little bit worried that maybe your audience is going to be overwhelmed if you start throwing out, you know, tons of numbers and statistics, if you can find a way to present that graphically or present it in some sort of chart, something that makes it just a little bit easier, you know, to wrap your head around, that's going to be my best advice there.
Yeah, and Brandy, I would like just to echo in there too and say conceptual skills. Paint the picture, the concept, you know, make it practical so they understand. You know, if you have to use an example and show an item and say we sell this for this, and to produce this item was X, you know, even without a visual. And so that leaves us with this much profit. And now all of a sudden they're starting to learn, and you gradually make that connection with them, you know. So that's just my thinking. And the visuals are good and all of that, but never give up. Keep going, keep exploring, because the understanding who your audience is and how you're going to speak to them is very important.
Yeah, absolutely. I see another great question that just came in through the Q&A. It says, what reports can an executive in IT expect to work with? If you are an executive within any specific department of a company, I would say the financial statement you are most likely to spend your time with is probably going to be an income statement. And what I showed was a consolidated income statement. What you're more likely to see is something that looked more like the reports that Bill showed. And those are the types of P&L statements that are used internally. So for example, if you're an executive, you know, within the IT department, you know, the CFO may, for example, send out reports showing, hey, this is the P&L for your department. You know, this shows the expenses that your department is incurring. And so that's definitely, I would say the P&L is definitely where you are going to spend the majority of your time from an accounting and finance perspective.
And Brandy, one add to that too is a lot of times off the P&L, you know, good managers will take a piece of that or a line item and make the connection for you too. So you may not be privy to the entire data set or whatever, but there are pieces and chunks that you can measure, and KPIs, you know, that kind of thing, goals, and that you know, now you got a scorecard. Now you know if you're heading the right direction, because some organizations are more transparent with that than others.
Absolutely, absolutely. Wade's presented a good question here. What tip do you have to integrate financial acumen to sales leaders who are not inclined to the financial side of the business? And I think this is an absolutely fantastic question. I'll share my thoughts and then I'll let Bill chime in as well. I know from a sales perspective, people that only work in sales may operate under the assumption that, hey, all sales are a good thing. Maybe, maybe not. This is where the contribution margin really comes into play. And this is what Bill was talking about, and the break-even point. You have to make sure that any sales that you generate, are going to really be contributing to your bottom line profit. And in most cases, they will. But not always. And so that's really something that I would say is important to, to explain to your sales staff, make sure they understand the role of sales, variable cost, fixed cost, what it takes to break even, what it takes to generate a profit, and that they bear that in mind when they're, drawing up their sales agreements, depending on what kind of autonomy they have. Bill, I'm going to toss it to you.
Yeah, and I'm going to keep it even more simple. You may want to just share very parts of that. For example, you may not want to include, I never include everybody in every line item or variable. That was saved for the upper administration meetings and the things that we did as leaders. What I did do, if you remember those cards I put up there on the one slide, and I showed how I got most of the team thinking. I wanted them to think, we're not here to necessarily give it all away. We're here to do good strategic decisions where we can spend $1, make 10, or do something. There had to be some benefit to the organization. Otherwise, we weren't going to do the deal or the promotion or whatever. So maybe you just want to hone their skill on break even. You reduced your margin this much. How much more do you have to do in sales? If you give that away, you have to do 50% more, 20% more. When they start thinking like that, they're coming to you now with strategies how to make money. And maybe you just keep score on that piece of it, not the whole picture. But the trick, I don't want to say the method is, the methodology is to go in and reward them when you see something moving right as a leader, reward them, recognize, celebrate. That's important because that moves things forward.
Absolutely. And another question, will the recording of this webinar be shared? I'm going to say absolutely. I think we can certainly do that. The next question I see is, how do you best deal with financial surprises that don't match up with your forecast? In the accounting world, we call those variances. Bill, how do you deal with variances?
You adjust, go back to the drawing board, make a quick adjustment. You got to be able to be nimble, be quick, understand your marketplace, the complexities. You're not going to recognize everything 100% accurately. You're going to use different forecasting methods. But the key is to have a pulse on your business, to understand the big picture. And that's what we're about today, the big picture, and then some of these components within it. And once you understand your market dynamics, the processes and characteristics, who your competitors are, what's going on, who's doing some aggressive pricing, you make those adjustments subtly. You may have a bad week, but you'll come back the next week before and make adjustments, or the next month before. But that's business. That's the cycle.
Thanks, Bill. All right, Anthony is speaking my language. Anthony says, what are auditors mainly focused on? I was an auditor in Big Four public accounting, so I can definitely speak to this. The external auditor's primary goal is to provide an opinion on the fairness of the financial statements and on management's assessment of the effectiveness of the internal control system. So what are the auditors going to focus on? They are going to drill into all of those financial statements that I showed you. They are going to test balances and transactions significantly, lots of testing. They are going to look through the footnote disclosures that follow all of those financial statements to make sure that if something is material, if it is significant to a financial statement reader, it absolutely has to be explained and disclosed. And they are also going to test the system of internal controls. Internal controls are those controls that are in place to protect the company's resources, they promote operational efficiency, and they help to prevent things like errors and fraud. They promote the integrity of the financial statements. So you can expect auditors to be heavily focused on those areas.
Yes, Brandy, and concurrent controls in the business are so important. You know, if something's off, it's caught right away, you know, red flags, that kind of thing. So, no, absolutely. And, you know, I'd be remiss if I didn't say in Management 330, you will learn about the 4 steps of control, the basic management course that gets you started. Ashley DeLosa is our program chair in that particular department. And, no, but that's a great course too, to start to get this framework down.
And thank you, Bill and Brandy. There were a couple of questions in the chat. We do have 3 minutes remaining if you want to try to tackle a few of those.
Yeah, let me see what I can find here. Well, the links in the
I'll
chat.
read it to you. It
Oh,
says,
okay.
what accounting and operations skills would you want to see a corporate leader gain who is coming from an engineering background?
Oh, wow. That is a good question. I'm gonna say you're looking for a combination of hard skills and soft skills. If you're coming from an engineering background, I'm gonna say you are probably already pretty strong from a quantitative perspective. So it's just going to be getting familiar with some of those, some of the reports and terminology that are important in your specific industry. And that's something we really didn't have a whole lot of time to touch on, but some of these things will vary a bit depending on the industry. So really, really be familiar with your industry, be familiar with the competition. And then of course you want to have those soft skills and be adaptable. And, you know, again, you're never going to know all of the answers, but you know the right questions to ask, look for the right people to help you, and positive attitude. That's
and Brandy, let me just add, you're spot on. Durable skills, right? What I'd like to say, I'm gonna just make a quick point on a BA of Operations Management Analysis program. We had external reviewers come in, we did our program self-study, and what we determined was we needed a leadership and motivation course in that mix, right? We had quantitative courses, quality courses, etc., control courses. But what we did is we put leadership and motivation, how to understand your people, your culture, how to motivate, how to understand people, apply Maslow, Oliver's 2-factor theory, etc. It's a great course, and really work on durable skills. That's my point, because I see so many great people are so talented, so skilled, much more than I'll ever have. And I know that I know what I know and I know what I didn't know, but I knew because I had the durable skills, I could relate to them and get the things I needed done. And so anyway, great question, whoever asked that. Fantastic question. People skills, that's durable skills.
Well, thank you, Team B&B. We're always so happy to hear from the two of you. You guys are always so filled with so much information. It's just hard to pack it into 1 hour. So with that being said, in closing, please make sure you follow our Thought Leadership series, webinar series that we promote every month. We have great speakers like Team B&B, and you can check for that in the link. In the chat, we do have a link to our Thought Leadership series. And also, if you're interested in learning more about our degree programs, there's a link in the chat. Again, Brandy and Bill, thank you so much. As always, this has been amazing. So we will see you guys next time.
Thanks for joining us, everyone.
Thanks.